The spirit of innovation is deeply ingrained in America, and Google is helping Americans innovate in ways both big and small. From improving emergency response times to protecting against cyber attacks, local, state, and federal governments are innovating with Google AI. This is a new era of American innovation. Find out more at g.co/American Innovation.
Reality radio for a really great future. We're talking real money.
You know, I think I should invest overseas because international investments are going up right now. They're going up. Is it a good idea to invest internationally now? That's the thing. You know, they're going, I've seen them. Lately, they're going up. Actually, they've gone up. We want to talk about investing broadly, internationally, in all kinds of things here on Talking Real Money, because it's important that you understand how this process of global investing works. I'm Don McDonald. Over there is Tom Cock. We're looking at each other even though we're 3,000 miles apart. Not that we want to, it's just that the program does that.
We're not looking that hard. Let's just put it that way.
I look away a lot. I pull my screen up and find something else to do. But there have been a lot of articles. They're starting to come out of the woodwork. Why you should be investing internationally. And we've believed that you should be investing internationally for as long as we've been talking about investing.
Yeah, and then there's all these articles that they're as you said, coming out of the woodwork. This from Morningstar, the Morningstar Global Markets ex-U.S. Index, in other words, everybody else except the United States, has more than doubled the return of the Morningstar U.S. Market Index since the start of the year in dollar terms. Remember, the dollar has gotten beat up too.
Right, so
doubled.
It's the double whammy. You've got the more money pouring into the overseas markets, and that money being lower value dollars.
Yeah, the U.S. dollars declined relative to other major currencies in 2025.
So you get a currency boost and a market boost.
Yep. Mm-hmm. Yep. And so it's a fact. And by the way, there's many people that point out that, frankly, since the crisis of 2008, that one of the reasons the U.S. market has way outperformed international has had, in fact, to do with the U.S. dollar. The power of the U.S. dollar has made a big difference there. But
and that's often ignored.
I agree.
In the process, because, the U.S. dollar has been the global currency for decades.
Yeah.
And this is the first time in a long time it's weakened.
Exactly. You make a very good point. That money is going into international funds because things like this, Mexico and Brazil are up in the neighborhood of 30%, an impressive bounce back from a dismal 2024. Japan's had a good year. China's up 25%. I mean, you go through all these numbers. The international small cap value stocks up over 30%. International emerging markets up over 25%. All those places that we think you should invest. But not just for this year.
I was going to say, but the question always is, this is what we're going to get. Oh, I see that the international markets are up, so should I invest in them now?
Well, I worry.
Yeah, I do too.
But I worry because the reasons why. So Christine Benz, who we're going to be seeing next spring, at the start of this year, said she expected international stocks to outperform over the next decade plus. I don't like predictions like that because I don't think, and let me tell you why they're saying this. Cliff Asness, a guy we know from AQR, said the rest of the world is cheap compared with the U.S. In other words, the better deals are to be found overseas, so you should be investing in those now.
Well, okay, but why weren't these people telling you a year or 2 or 3 or 5 or 7 ago to invest internationally?
And that's the bigger point, because if you go back and look, and this comes from dimensional funds, in the 1970s, guess what the better markets were? International.
Overseas, yeah.
The 80s, U.S. 90s, U.S. 2000s, the aughts.
Overseas.
Exactly. 2010 to this point, still been the U.S. But it goes back and forth. Nobody knows what's going to happen. I want you to think let's pretend that well, maybe you do. Maybe you sit down on a still somewhat warm afternoon. You close your eyes.
Still somewhat warm? Dude, I live in Florida.
Gee, I'm speaking of us here.
Still incredibly hot?
It's coming to an end here. But you close your eyes, you fall asleep, and you're in a dream. You're in a trance. And all of a sudden
you wake up in drenched in sweat going, why am I laying outside in Florida in the summer?
Exactly. Get me out of here. And you're in Japan, and it's 1990, and you just came into all this money, and you're like, how should I invest it? Well, let me look around. Well, first of all, Japan, the market is the largest in terms of market cap in the world, bigger than the United States, bigger than the UK. I'm like, oh, that sounds pretty good. Then you look around.
I do remember hearing people say we were in trouble and that Japan was going to buy up the world.
I'm going to mention that. They bought like Pebble Beach, right? The golf.
Yeah, I remember that.
And their management style was admired all over the world, and they were buying companies, and you're like, maybe I should just put it all in the Japanese market because no one's going to touch that. And then you fall back asleep because it's a warm afternoon, and Don's right. Maybe you're a little sweaty, but it's tiresome. And you wake up and it's 2024, and you go, oh, wow, I got to check my money because it's really, really good.
I'm feeling a little Rip Van Winkle-ish here.
Exactly. Which might have been the better approach. You wake up and you look around and go, wait, my money's about the same as it was in 1990? That's right, because the Nikkei took that long after a sizable plunge to come back to where you were some 34 years earlier. That's why I don't care if you love the United States, because we love the United States, but as an investor, you want to move the money around. You want to diversify because things like that, single countries can have real problems, right? Concentration risk is a real thing. That's one. Number two, I do believe that, and this is not just this year, all years, you want to invest in places with greater upside potential. Those would be places like emerging markets, right? Developing countries, places where the economy is still trying to figure out how it's going to work. That's okay. You're not going to put all your money there, but you're going to put some of it. Most of you do not, because even in international funds, although I did, and we'll talk more about this later, but the TSP has added emerging markets, by the way, to their international exposure, which is good. But most international funds have very, 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 very little tiny bit in emerging markets, right? You want to be in those places that have that upside potential. Further, you want to invest in companies not based in the U.S. People forget that, for example, Toyota, Samsung, others, you can't invest in those if you just invest in the U.S. There are other places. And then finally, I think, Don, another one, you mentioned this, is overlooked, is this currency risk. You want to redenominate some of your dollars in other currencies to give you balance for whatever may be coming ahead. That's a big one to me.
Yeah, there's a chart that Dimensional recreates every year that lists all of the developed global markets and ranks them in terms of performance each year. And they show the top ranked market in each of those years. And it's funny, you would think that the best performing market over and over and over and over and over again would have been the U.S. But the reality is rarely over the past several decades has the U.S., even in periods when the U.S. market has done very well against the aggregate international market, different markets rise to the very top in different years. In some years it was Norway, in other years it was Austria.
Have that great chart that you showed.
It's a great chart, and what it says is you can't know which part of the world is going to do the best over the next year. You could not have predicted that in advance. You would look at this chart and go, wow, Norway was the best performing market. Iceland was the best performing. You don't expect these markets to be the best in the world, but they do it at strange times, which points back to our basic premise, and that is you own them all the time.
Yeah, I think that's a good way to put it. And by the way, there are those who argue against international investing. One of them was John Bogle, famously was sort of the
argument.
The argument was you get international exposure by investing in Microsoft because 50% of Microsoft revenues come from overseas. Well, it turns out, these aren't our numbers, but Dimensional Funds has looked at all this and found that most of the increase in those overseas markets come from exposure to the local economy. Mm-hmm. You're actually exposing your dollars to what's going on.
Not to the market, but
Correct.
to the economy,
Exactly.
which is a different thing entirely. That's a leap, a logical leap to take it from you're investing in the businesses in those countries to you're investing in what the people are buying in those countries. For example, I'll give you one of the great examples. A lot of the foods you eat every day that you're going to think are totally American
My hamburger?
come from a company called Nestlé S.A.
Switzerland.
DiGiorno pizza sounds Italian or American. It's Swiss. It's a Swiss company, and you're not going to participate in their revenues unless you have a globally diversified.
I'm going to argue with you there. I participate in their revenues every day. I'm giving their money on a regular basis. I don't, you got to check your numbers there, but yeah, I'll get it. So yeah, okay.
Nestle makes the very best chocolate. Oh, they said
I've
that.
heard.
I
Thank
don't
you.
think so.
Now you're really showing your age. So again, don't be caught up in the what's happening lately. Get caught up in the longer term. You said it right, Don. Looking way back, it's made sense to be diversified. It's made sense to not have concentration risk. And it's made sense to expose your dollars to other economies. Got to do that over the long haul.
Yeah. And we have believed that all the time, all along the way. We're not just suddenly excited about the international markets. We've said over and over again, we don't know when they're going to go up. We just know that someday they're going to go up.
Yeah.
And
well, they're going to go up more than the U.S.
I'm looking at Nestle's brands. Let's see.
Who else do they have there?
They own Perrier water. They own Purina dog food.
Sure.
They own San Pellegrino drinks. They own, of course, all the Nescafe stuff.
Sure.
They are the ones who sell you all of the Starbucks coffee that you get and you use at home. It's from them.
So is DiGiorno pizzas, that's theirs too? Is that what you said?
That's theirs.
Okay.
Nestle Toll House cookies. There you go. That's the one that gets you.
That's the revenue's going generating fast. So good stuff. Okay, so stay international, stay global, think local, but invest
globally.
Yeah, here you go. This comes
they own
from
those drumstick ice cream things that are so good.
Those my grandsons love those.
Those are so good. They have the little tiny ones which they don't make you feel as guilty. They're like 90 calories.
I always feel guilty. Greg writes us from El Cajon, California. He says, "Love the show, but just heard a podcast where you talked about moving to a state with low or no state tax, and Don said, if you take into account these specific few factors, California is the cheapest." I'd be surprised if you said that. But
wait, no. It was comparing it with some other states.
Okay, he said this is where the but comes in. If you factor in the total cost of living, my great state of California ranks 50th out of 50. I believe that. I didn't know. I know you didn't mean to imply California was the cheapest, but someone not paying close attention, it might have sounded that way.
No, and it was based on total taxation.
Yeah. Here's what I've said.
Because of all of the other taxes. Yes.
Yeah. This is the reason my father, who retired, my parents retired in California. My dad did not like paying state income tax on his pension, his federal pension. He didn't like this, so he left. So what I've said, I don't know what you said, Don, but I've said about taxes are, yeah, you can be careful about them, but I don't know that you can really completely avoid them at any state. I mean, North Dakota. I mean, the government's got to collect something to pay the bills. Now, California, pretty high taxes, high state income tax, high capital gains tax. Great state of Washington, no income tax, but they do have a capital gains tax. So, and we have a pretty high sales tax, for example. So, do they get you? I always feel one way or another, yes, but could you retire a place that would be cheaper in terms of your income tax? Sure, 100%.
Yeah, I think that it was a comparison that everybody said it was the most expensive, And the fact is, it was less expensive than Hawaii, New York, Vermont. The implication was definitely not that it's the cheapest state to live in, because I know it's not. It's one of the most. When it comes to just income tax,
bingo.
They're really. I think they're the worst.
No, I think New York, because you got the state, you got the state, you got the local as well. There you pay in Manhattan. So I think that may be the most.
It's New York, and California's number 2.
Okay, so it's bad all the way around. It's just bad,
and my daughter lives in New York. The taxes.
Well, the good news is she doesn't
have
have
any income on which to pay it right now.
She's okay for them. I don't want to
Except
hit the sore points here. Tim writes us from nearby Cranford, New Jersey. That's kind of near New York, right? Hello, Don and Tom.
I thought you meant near you or
No,
me.
not
I'm going, no, it's not. It's a long way.
I enjoyed the podcast you released yesterday, the 4th of August. Just Invest. You had shared with us the total returns for each of the 4 types of investors for a 20-year period. I assume this was the period ending in 2024. I'd love to see what these returns were for a different period, as interest rates are very low for 20 years overall. Perhaps you could share with us total returns for 20 years ending 2004 and 1984 for each investor.
No, this was the 4 people that we,
correct.
And it was a really detailed study done by The Economist. And it ended, I think, like in 2020. But I'm not 100%.
Okay, but here's what I would do if I were you. If you were, first of all, this has come up so many times. I wouldn't buy anything just because the return's been good the last 10 or 15 or even 20 years. That's not why I would invest. I wouldn't say, well, this makes sense. I would be looking at the longest period possible and say, here's kind of how assets have performed. And to get that, you can go to our friend Mark Hebner's IFA.com and then click on IFA Index Calculator. So I looked. March 1, 1999. I don't know why he starts on March 1st, 1999, but one of the reviews, one of the index fund calculators does 100% in stocks, March 1, 1999 through July 2025, pretty recently. The 100% stock portfolio made, not going to surprise you, 8.8%, which is about what we think you're going to. I would just look at things generally, because to sort of parse things, to take these numbers and say, well, but look at this 15-year period or whatever. Gene Fama's not going to do that. I guarantee it. He's going to say, just look at the long-term returns of investment.
Yeah, the show I think he's talking about, though, was when we had a person who invested at the highs, a person who invested at the lows. And again, that was a very complicated calculation that The Economist, the London paper, did. And no, there's no way we're going to run that for different periods. Not going to happen.
No, but I said you can go do your own.
But it's not the same, though. That's not going to tell you investing at the highs or the lows. Or
everybody's return is going to be different. Mine's going to be different than Don's because the day I invested, there's a whole bunch of factors that go into that. So, but I was just looking.
I was looking that episode up. I was just looking at Podbay. We have 1,705 episodes of Talking Real Money up there.
That's crazy.
1,
we hit 2,000. Is that it? That's 300. How many do?
That'll probably be about right. We'll probably hit 2,000 and go. I'm too old to do this.
Tired. Jeff from Prosper, Texas. Love the name.
Yeah.
Writes us.
They sound successful there.
They do. They're doing well. Don and Tom, I've been listening to the podcast for about a year now and really appreciate the wisdom and clarity you both bring to financial planning. Thanks for sharing your expertise with us. Here's a snapshot. He goes through a lot of numbers here, which I think is hard, but at the end of the day, and I apologize for not reading all of them here, Jeff.
Please.
And by the way,
don't.
No, you could call us, and we'll be glad to do this more specifically. But he talks about having $300,000 in a high-yield savings account, $400,000 in a brokerage, $140K in a former employer's traditional IRA. Here's the part that gets important. And $36K in a current employer, and $1.5 million in a traditional IRA. Okay, getting it?
Okay.
400,000, blah, blah. Okay. Mm-hmm. The key here is the 1.5 in the traditional and the 36K in the employer. He says with a rollover 401K in the rule of 55, if he rolls the 2 traditional 401K accounts from former employers into the current employer, can he use the withdrawals under the rule of 55? Now
the substantially equal contributions over your life expectancy. Yes.
So take the money out tax-free before, or penalty-free before
penalty
59 and a
free,
half. 59 and a half. Yeah, I think you can do that.
Yeah, you can do that.
Yeah.
It has to be annuitized.
Exactly.
Basically.
Once you said it.
Once you start it, you can't stop it and go, I don't want to pay
No.
taxes this year.
No.
You have to
I think
keep
you're okay
doing
with
it.
that. Yeah.
And let's see, Prosper is a very distant north suburb of Dallas, just in case you were curious.
Great name. He also asked about retiring abroad in Guatemala, which I know you have a lot of familiarity with. He says he plans to retire in Guatemala.
I've never been to Guatemala.
Are there any important financial or legal considerations I should be aware of?
Yeah,
especially regarding how living abroad might impact my eligibility for Medicare or Social Security.
It's a third world country.
Medicare might be a problem.
Medicare will be a problem.
Okay, Social Security, though, you get your money no matter where you are. That doesn't matter.
No. If you're going to go live in a foreign country, you need to vet that country very well. First, you need to vet their healthcare system.
Bingo.
Just in general.
Yeah.
I mean, if my wife and I are worried about the quality of healthcare in Orlando, I can't imagine what it's going to be in Guatemala. I'd be a little bit concerned about the quality should you require some seriously expensive life-saving care. You're probably going to need some sort of private insurance.
Yeah, you will. I can almost guarantee you that. I have read up a bit about that. So, by the way, I was thinking that I should go back to Guatemala and be the national team soccer coach.
They're pretty good. I think they're too good for you.
Oh, okay. I got to find a smaller country.
A lot smaller that doesn't play soccer.
I see.
Maybe Greenland. Greenland. Yeah, I bet you.
Can't be Iceland. They have a pretty good team.
Yeah, no, Greenland, because there are only like 12 people in Greenland. So I think,
and that's you only need 11, so you're all set there. So it's good. Anyway, so thank you, Jeff, for that question. Again, if it's a question where you get into all these accounts and that kind of thing, probably easier to do that off the air. I mean, because it gets to be a cumbersome
well, and we actually
answer.
do that with some questions. Some of the questions are just too complicated to read.
I just did it for a guy who called the show. So what about this? I said,
and I did some checking on Guatemala's healthcare system.
How is it?
Not good.
No.
Not good. They have free healthcare for everybody, but the country, get this, free healthcare system for everybody.
Which
they spend
covers
$97 a year per person to fund their healthcare system.
That does not sound very good, no. What does the U.S. spend a year per capita? Probably $9,700 or something.
Well, no, let's see. Does
that's low. Isn't that low? Sounds low.
It's. I'm going to look it up because I think that's important. Let's see. Well, they're giving me. I don't want that number. I should have been more specific on my question. Let's see. U.S. healthcare spending. We spend about $15,000 per person.
I was low.
So there's a pretty big gap between 100 and 15,000.
No, was it 100 a year or 100 a month?
A year.
100 a year? Oh, good Lord.
A year.
Yeah, that's wow.
I'm thinking the care's not going to be that great. You better hope you don't get sick, or if you do get sick, that it's a very fast death.
Yeah, that's fair.
I hate to say that, but
for God's sakes, that's very.
I'm sorry.
Great way to end the show. I tell you what,
you got to be practical about this stuff.
Oh, Lord. Okay. How do we arrange that? By the way, who do we call?
The quick death. You go to Canada.
Wake up.
You can arrange it there.
Oh, I see. Okay, that's not the only country, but
I know.
You go to Oregon; they'll do it for you. But you have to be terminal, I believe. Anyway,
right? Canada's, I think, easier.
Anybody can just walk in and say, "Time's up."
Well, I think you probably have to be Canadian. So,
well, that's a small problem. So, anyway, enough messing around.
What are we talking about?
No idea.
Why are we talking about euthanasia?
Go to the contact us form, and if we can help you, we'll be here to help.
That used to be a charity, I think. Euthanasia.
Contact us form?
No, euthanasia.
Oh, euthanasia. Charity. God, that's disgusting. I think that's the end of the show. Before
go to talkingrealmoney.com, ask questions, meet an advisor, do all kinds of stuff there. Yeah. And please tell friends about the program, even though it does digress once in a while. Because most of the time, though, 90-ish% of the time, we're talking real money.
The opinions and views expressed on this podcast were current on the date recorded. Opinions, estimates, forecasts, and statements of financial market trends that are based on current market conditions constitute our judgment and are subject to change without notice, including any forward-looking estimates or statements which are based on certain expectations and assumptions. Although information and opinions given have been obtained from or based on sources believed to be reliable, no warranty or representation is made as to their correctness, completeness, or accuracy. Information presented on the podcast is not personalized investment advice from Appella Wealth. The views and strategies described may not be suitable for everyone. This podcast does not identify all the risks, direct or indirect, or other considerations which might be material to you when entering any financial transaction. Past performance does not guarantee future results, and profitable results cannot be guaranteed. We hope you realize that the information provided on Talking Real Money is for informational, educational, and hopefully enjoyable purposes only. The podcast is not trying to get you to buy or sell any financial products or securities. Instead, the program is provided as a public service by Appella Wealth, a fee-only registered investment advisor. Please see Appella Wealth's ADV Part 2A on our website for information regarding Appella's fees and services. Appella Capital, LLC, DBA Appella Wealth, is an investment advisory firm registered with the Securities and Exchange Commission. The firm only transacts business in the states where it is properly registered or excluded or exempt from registration requirements. Registration with the SEC or any state securities authority does not imply a certain level of skill or training. Appella does not provide tax or legal advice, and nothing either stated or implied here should be inferred as providing such advice. Thanks for listening, and please visit TalkingRealMoney.com for more information and important disclosure related to performance of any specific index or fund quoted in this podcast. And the lawyers get richer.